quick video explaining to you the pound kiwi trade that we sent out to our premium subscribers. So this was a very good trade that we took, and at the moment of recording right now it has already hit take profit number 2, and it's going on to hit take profit number 3. So as you can see in our Telegram channel, we sent out the order to buy pound kiwi at 1.9502 with the stop loss at 1.9452. So I've marked out the levels right here, and in just a moment's time I want to run you through the thought process behind this trade. Like, why did we take this trade, what were we looking for, what did we see, and why did we place the stop loss and the take profit at these few levels that is given in our Telegram channel. Now, if you are a Telegram channel subscriber and you are new to this YouTube channel, please do me a small favor and hit that thumbs up button and subscribe to the channel. We have many educational videos like this on the channel. Now, if you are a YouTube subscriber and you have not joined us, right, please join our free Telegram channel, because we send out trade signals like this in our Telegram channel week in and week out, and it's totally free. So you'll find the link to that in the description down below. Now let's jump straight into this currency pair, which is pound kiwi, and why we decided to buy at 1.9502 and set in a stop loss of 50 pips at 1.94520. Now this is the daily chart. Okay, so the first thing that I want to highlight to you is that this was a good strong level. So if you were to look back into history, you can see that if I were to draw it like this, you can see that this was a previous high, okay, and then when it broke up, it retraces back down to almost this level. Okay, right here there's a kind of like a fake break of this level, and then after that you have price failing to close above this level before it starts selling off, and then after that, of course, here you have a doji. Now, if you cannot see this, one of the tricks that I always recommend is to switch to the line chart. So if I were to switch to the line chart, you can see that this was a previous high. This was a previous high as well. So this is a very strong level. And on Friday, we had a nice sell down into this level exactly. If you are a little more advanced and you've been watching our YouTube videos, okay, one of the concepts that we teach is the rally-based rally. Okay, this is demand. So if you were to draw this as a demand zone, then you will know that this is a very strong level as well. Okay, if you have not watched that, what I will do is I will leave a link to that video at the top right and at the end screen of this video. So that video will show you how to use the rally-based rally concept to identify demand and supply zones. Now, anyway, this is a strong level, even if you didn't realize that this is a rally-based rally. Okay, so on Friday, it sold down directly into this support level, and on Monday, it just started retracing up. So rather than waiting for the candlestick to confirm, okay, because if you waited for Monday and you waited for the close here, okay, you'll be buying very high and you are buying into resistance, which is somewhere right here. So rather than wait for the candle to confirm on the daily chart, we decided to be more aggressive, and we took the the long position in the lower time frame. So this was the exact level that we got in at. This is our entry. So we got in somewhere here when we saw this pin bar right here. Okay, just a gentle reminder that, again, remember that price is at support on the daily time frame. Okay, this is resistance, and this is support. Now, that is why when we saw this candle, okay, we saw this is more like a doji, or rather also an engulfing pattern during the Asia session. We decided to go long at somewhere around here. Okay, our stop loss was just about 50 pips. To be honest, a better stop loss would be somewhere down here. Okay, it would be something like this. But we didn't want the risk to reward to be so small, because if we were to do something like this, then the risk to reward will be very small. So we just opted for about a 50 pip stop loss, which is usually, if you are part of our Telegram channel, you know that it's usually about 30 pips. So 50 pips is already a wider stop loss. Okay, but that's accounting for the fact that we are trading pound kiwi, and pound kiwi is a little more volatile than the usual currency pairs like euro dollar, pound dollar, kiwi dollar, and so on. So we entered here, and it's not difficult to see why our take profit was over here, okay, because this is the recent high. Okay, now just to be clear, we have three take profit levels just to help you manage your trades, but ultimately our final take profit would be this level because this is the recent swing high. Okay, it's not difficult to see why this is the ultimate take profit level and why we recommend getting out somewhere near the high right here. But we have also gave you 50 pips, 100 pips, and 150 pips to lock in your profits to manage your trades. Now, before I end off this video, there's also one thing that I want to highlight on this chart, and that's this demand zone right here as well. Okay, so this is a very strong demand zone because you have a piercing pattern here, and then you have an impulsive move over here. So if you use the supply and demand strategy that I talked about earlier, you will also notice that this is demand. Okay, so of course you want to be buying at demand, and then you want to put your stop loss below in an ideal scenario. Okay, now again, I don't expect you to understand this fully. I don't expect you to be able to identify this in real time, but I think the key takeaway that you must understand, or the key takeaway that you should take out of this trade, is that you need to refer to the higher time frame levels. Okay, this is a resistance turn into resistance here, turn into support right here. Okay, and the other thing that you should know is that if you switch to the line chart, you can see that this is support. Okay, the line chart will show you very clearly where the support and resistance are. Okay, this is the number one tip that I have for you in this video. Okay, so as always, right, I hope you gained something from this video, right? Make sure you hit the subscribe button. If you have not yet joined our premium Telegram channel, right, again, access is 100% free. Okay, we do not charge for it. All you need to do is just to fund in an account with our sponsoring brokerage and deposit a minimum of $300. Once you have done that, we will give you access to our premium signals right here, where we send you all our trade signals as well as the Forex course. Okay, our course where we teach you how we generate these signals. Okay, we are not only a channel which just send you signals, we also show you how we do it. Okay, and it's all for free. You do not need to pay us. Okay, it's all sponsored by the brokerage. Okay, all we need you to do is to take action, open an account using our link, and make the deposit. Okay, so please trade safe. Okay, it's only Tuesday and we are looking like this is going to be a good week for us because we had many profitable trades. Okay, please trade safe, manage your risk, and we'll see you in the Telegram channel.